Hello, hello, hello. Can anybody hear me?
Good evening. Yes,
Hi, Monique. How are you today?
I'm okay. How are you?
I'm fine. Trying to keep up with you with the snappers. Sure. Okay. See, Letitia, is that you?
Yes, good evening.
Hey, how are you?
I'm well, thanks.
Hey, how are things at Bank of the Bahamas?
Okay, all right.
You guys opened a new branch the other day.
Yes.
Uh, Banking 21st Century branch.
I tell you.
That's good. Bank of the Bahamas has to succeed one way or the other.
That's right.
Always using on. Brian,
Good night, I'm here.
hi, how are you?
I'm doing well. How you doing?
Great, great. Um, we'll give there's somebody else. Shaniqua just showed up. Shaniqua, can you hear me, Shaniqua? Yvonne, can you hear me?
Good evening.
Hi, Shaniqua, is that you?
Yes,
Yes. No, how are you?
I'm pretty good.
Wonderful, wonderful. I see, Shaniqua, you're at that institution where your new managing director used to be at another institution, a youngster, yes?
Yes, that's correct.
Yeah, how is he doing so far?
He's doing pretty good.
That's good. I remember when he was in Pampers. Now he's all grown up, apparently.
Yes, he's all grown up.
Ah, where does the time go?
Time flies, right?
Absolutely, it does. Absolutely.
Mhm.
Yesterday, I was looking at my children in the crib, wondering when they'd grow, and now they're grown and gone.
Mhm.
Time flies.
Yes, it sure does.
Hey, Javon, are you there? Javon. Yeah, I guess he'll kick in shortly. Okay, so that only leaves Indira. I guess she'll join us soon, somewhere along the way. So, first of all, how did the reading go last week? Did you guys get any reading done?
Yes, I got some in.
Fantastic.
Well,
Just make sure you read as often as you can, make your study notes, pull out the things that are important, um, things that require defining, things that you have to give examples on, be able to make notes of them, highlight them, whatever you do, because that is the key to breaking down this information and getting you ready. Anybody remembers which day the midterm is going to be held?
yes, March 6th.
11.
Uh-oh, 6th or 11th, which one?
I thought it was the 6th.
It is the 6th.
Yeah,
Six,
the sixth.
yeah, week number 6, March the 6th. Okay, please make a note of that. We are now in week number what?
Number 3.
Three.
Yeah, we're in week number 3. And so we have today and 2 more sessions, and then you'll be writing your midterm just like that. So don't presume that you have all the time in the world. Time is an amazing thing. It keeps flying. And I always tell my working students, use your weekends productively for study and reading, because once the regular week begins, it becomes unpredictable. True or false?
True.
Absolutely. The only chance you have at some kind of prediction is Saturday and Sunday.
Yes.
While you are studying and working, use your weekends very productively, so that if you have a week that goes badly, you can still stay ahead of the game. Okay? That's kind of the key. Javon, are you there now? He's like, no, not yet. Okay. So a little recap from last week on the whole issue of what is auditing, or what is an overview of auditing. We did all of that last week in our discussions. Anybody remembers one of the definitions for auditing again? Definition, quick and dirty definition.
Examination of the books of accounts.
Yeah, examination of the books of accounts. Quite as simple as that.
Mhm.
Okay. When you're giving your answers, they don't all have to be complicated. Some of them can be very simple, very straightforward, as long as it answers the question. Uh, Auditing has been around for centuries. It is nothing new. For those of you who've done your reading, you know what I'm talking about. If you haven't done your reading of the first module yet, then after class tonight, you have to get started. How's that? Not likely, but that's what you have to do. All right. So it's been around for centuries, and then eventually it got more and more sophisticated, where it got around to auditors coming in to check the book of accounts for the shareholders who own the companies, and then finally and eventually for all kinds of other people who are interested in what went on in a particular company, like bankers who lend money to the company, shareholders who own the company, unions who have members working in the company, all kinds of people, the government, because they want to know if you're paying the correct taxes and VAT or income tax. So the work of the auditors become very important, very sophisticated. We've come to trust and eventually distrust some of our auditors who did not have very good reputations in recent years and in the past. But generally, most of them seek to do their jobs. Okay? That's the key. Does anybody remember what is meant by the independent auditor?
Independent auditing is having someone outside of the organization who,
Absolutely, absolutely. Now, either some persons have had have very good memories, or somebody's been reading and reviewing, or whatever it is. That's the key. Okay, that is exactly who an independent auditor is. Is an internal auditor independent?
no, because
No,
they're
it's
paid
not.
by the company.
Yeah, they're paid by the firm. And once you are paid by the firm, then obviously there's some kind of compromise, some loss of independence. However, they are still required to be as independent as they possibly can. And wherever they find anything wrong, to report it to the company board of directors and also to the company's external auditors when they come in as well. One of the first group of people that the auditors ask to talk to is the internal auditor or internal audit department. Obviously, they want to get information from the internal audit department about what kinds of things they found during the year. This helps the auditor to decide how to approach his audit. And so collaboration is the key. Right? So the features of auditing then has to do with this thing that we call a systematic examination of the records, that the audit should be done by an independent person. These are all features. For those of you looking, it's on page either 2 for some people or page 5 for others. Features of auditing. Systematic review, independent auditor. The independent auditor comes in to verify, make sure that what you say is actually what it is. They can't take your word for it. They have to check you. Sometimes they find that you tell the truth as a firm. Other time they find that some firms are lying through their teeth. about certain things. Okay? But these are the characteristics and features that auditors must have. Okay? Auditors have to be critical. So if they come in and ask you a lot of questions in your company, don't panic, don't get upset, don't tell them, don't be mean to them. They have to be critical. If they sound like they don't trust you, they have to be critical. These are all features, for sure. And they have to check the paperwork. Have to tick things off. Check, bring that, verify that. You said you spent 1 million to give to charity. Prove it. It's the company. Prove it went to charity and not into your own personal bank account. Okay. These are all features of the auditor. And then, of course, when it comes to the financial statements, the auditor's job is to make sure that those financial statements are done properly. Okay. All right. I think somebody's mic might be open. Yeah. Somebody's mic might be open. Okay, great. Also, if you remember, we talked about the objectives of auditing. Anybody remember the two objectives? The two objectives,
Primary and secondary objective.
primary and secondary. And under secondary objectives, there were two sub.
To detect fraud and errors.
Let's say it again.
To
Yes,
detect fraud and errors.
yeah, the detection of fraud and errors. Now, let me ask you a little sneaky question. Is it only detection of fraud and errors?
And prevention.
And prevention, yes. Detection and prevention. Which one is better, detection or prevention?
Prevention.
Prevention.
Of course, prevention is
Uh,
always better than cure. Remember that. Even outside of auditing. If you could prevent something, that's always better. If you could prevent a fight, run. Don't worry about what they call you. They call you a punk, so be it. You don't need the headache. Because it takes more strength to turn away than to get involved with the action. Not knowing again, of course, what the outcome will be either. You might go in alive and come out. Anybody knows? You may go into an argument alive and come out what?
Dead.
Very much
Dead.
so. Yeah, as we see every weekend in the Bahamas, don't we? Yeah. So prevention is always better than cure. And so under the secondary objective, the objective secondarily is to detect and prevent frauds and errors. Okay, way to go. Then you should know the difference between manipulation of accounts and misappropriation of cash. Okay, you need to know what they are. I think we talked about those last week. Okay, for example, ignorance of accounting principles can lead to problems. Negligence in accounting can lead to problems. Auditors are looking for all these kinds of things to see whether people are properly trained to do their jobs and therefore doing it correctly or not. That's where a lot of errors occur if you're not properly trained. And certainly to see if there's any. By the way, what is fraud by definition again? Anyone?
You have to do the
Fraud is
willful
for
In the intentional
intentional and
misrepresentation.
intentional.
yeah, yeah, intentional. Intentional what?
Misrepresentation
Mhm.
of financial information.
Intentional,
Misrepresentation
yeah,
of financial information.
misrepresentation. Yes, yes. All right. And errors again, on the other hand,
Errors are more unintentional.
yes, more unintentional. Excellent, excellent. So now the thing is, you can now put names to your working lives. That's the whole point. When problems happen now, you can actually describe them in real terms of what they mean in their proper context. When auditors come in to have a conversation, you're not lost anymore in all of these things. You have an idea of why they're there for real now, not just there to aggravate you until you bring another 15 files. Like these bloody auditors. They don't think people have anything else to do. Okay. Now, because of this information, hopefully you have a greater appreciation for the work of the auditor and why it's so critical to the company you work for sure. Again, remember we said the auditor at the end of the audit must express an opinion as to whether or not the statements, balance sheet and income statement are true and not misleading, and that errors and frauds do not exist. Can they guarantee it? No, they're not God. They just come in and give it their best professional application. And if, as a result of their reviews and checks and vouching and balancing and all this kind of stuff, they see either minimum or no errors and frauds, then they can give an opinion and say, we are of the opinion that these financial accounts are true and correct in all material respects, and that the auditor has not found any errors and frauds in the financial statement. Okay. And for those of you who did your reading, you'd see that. That's kind of what the audit opinion is all about. Whether the financial statements show a true and fair state of affairs. All right. By the way, what is the primary objective of the auditor again? Anybody remembers?
To report to the owners, to say whether the balance sheet on the profit and loss are correct.
Yeah, that's the primary objective, by all means. Okay, to report to the owners. And what's the name of the owners that we use?
Shareholders.
Shareholders. Okay, way to go. All right, moving right along. I think we talked about the detection of frauds and errors. I hope you guys read the examples that are given. Don't just breeze over the listing where you have the various examples that are given of frauds and errors and defalcations and all this kind of stuff. Of course, you're not going to remember all of them. That's not the idea. The idea is that you read through them and focus on as many of the important key examples for each particular area that you're looking at, so that not only can you respond to a question, but even when you're out there in the world of work and you detect these things or see these things or hear a conversation about them, they will mean something because you have applied yourselves to what they actually are. Okay? Don't forget that defalcation involves the misappropriation of what?
Cash or goods.
Cash or goods. Yes. Remember also, auditors are going to check everything pertaining to cash. Anybody knows why? Why is the auditor so interested in cash when they come to audit? Why are they so interested in cash, you think?
That's the easiest thing to steal it.
Yeah, of course. Yeah, you have to be a rocket scientist and have a PhD to figure it out. Yeah, cash is the company's most liquid asset, and it is the most desired asset of any company anywhere in the world. And if you don't take steps to protect it, somebody is going to eventually get greedy and come up with a reason, as we say in Bohemianese, to thief it. Anybody can spell thief? Come on, give it a shot. Thief.
TIEF.
Thank you very much. I might put that as a bonus question. See somebody get an extra point. Yeah, you don't watch your cash, somebody will be tempted to thief it, steal it, take it without your permission. Okay? That's why we have to take every effort. By the way, speaking about stealing cash, haven't you guys noticed? Anybody knows where the Chinese bookstore is on Mackey Street? You guys don't go there?
Buck World?
Yes, you
Yeah,
mean
Book World.
Book World, yeah.
Yeah, you guys have been there, correct?
Yeah.
Yeah.
Haven't you noticed that the Chinese people who own that store, they're always hanging around the cash register like flies?
Yes.
Mhm,
Ever wondered why?
mhm. Yeah, they watching
Because
everything.
cash is desirable.
Very desirable. Now, I'm not suggesting that the cashiers that they have there are TIFAs. That's another Bahamian word. It's a nice bonus question. Spell TIFAs. I'm not suggesting that. However, they don't leave it to chance, do they? No. They are always watching the register, but it's not the metal register that they're watching, is it? They're watching the liquid cash. Any Chinese restaurant you go to, who's at the register most of the time?
Honest.
You're one of them.
Mhm.
And if one of Yina happen to be there, they are nearby watching Yina. True or false?
So true.
No,
Very true.
because they're watching the money. And to some extent, they're justified, not necessarily always. You have to trust people sometimes, but money is a strange bedfellow. And auditors know it too. That's why the first thing they ask for when they come into the firm to audit, please, where are the bank reconciliations? Are they up to date? We need to check them to make sure that nobody decided to siphon money out of this company. They get that bank reconciliation, they check all cash transactions to look for any errors and frauds in order to make sure, to the greatest possible extent, that the money, none of it was actually carted off. Because somebody said it so eloquently a moment ago. Cash is a desirable asset. Okay, my. Question for the guys. Indira. Indira is going off to have coffee already.
I'm here. Good night.
Oh, there you are.
Good night,
Indira.
all.
Okay, good night. We thought you were not going to join us tonight.
I'm here. Good night. No,
All
of course.
right, question for the guys. Ryan and Siobhan, are you guys still there?
Yeah, man.
Good.
Yes, sir. I'm in.
Question is for you guys. Which is more desirable? A beautiful girl or money?
Sorry.
No, don't apologize. Remember, I told you my class is open so you can laugh as hard as you bloody well want. Guys, for you, I'm waiting for an answer, and so are the ladies.
I'd pick the woman.
You take the what?
I take the woman.
The girl, yeah. Who said that, Javon or Brian?
Brian.
Brian. Javon, be honest. Which one? Javon,
Percent.
Brian was honest. What is your answer?
9 times out of 10.
I'll go
It's
with that.
probably it's probably the money.
Money? Okay, so it's a split. And it's a very honest split. Okay? Because typically that's how it works. Some guys will go for the girl, and some guys will go for the money. That's just how it is. Now, turning the tables. Ladies, would you go for the handsome hunky guy or the money?
The catch.
The cash. Indira, no hesitation. Now, money. Money. Hey,
I think I'll take money for 1,000, Alex.
yeah. Man, you guys, I love it. Okay, Monique.
The
Thank you.
question.
Yes, Indira, question?
You have a question for me?
No, I thought you had a question.
No.
Okay,
No, no, no. I said all these trick. I said these trick questions.
trick questions. Shaniqua, the hunk or the money?
Go for the money.
Money, 3 out of 3. Letitia,
The man with the money.
Letitia, you, that was masterful. She said, I want both him and his bloody money. So, but the truth is, in practice, this is exactly how the world works. And at least you guys were honest about it because a lot of people are not honest about it. All right. Typically, guys are 50-50. Girls tend to say the money first and then the guy. And then every now and then somebody pulls off Letitia, I want both of them. Until they push her back to the wall and say, choose one or none. Then she'll say, Letitia,
You need money to survive.
okay, way to go. All right, way to go. All right, so cash is always open to misappropriation. And so, even in some people's homes, some people live in houses where you can't put your wallet or purse down anywhere. Somebody in the house is going to swipe something, if not the whole bloody thing. And that's in your home. So you can imagine somewhere at work, people get an opportunity, they're going to run off with it. And sometimes it's the person you least expect. Your boy or your best friend. Really? Matilda? No way. I don't believe it. You know, we know beliefs could be coming from Matilda. We have lunch every day, and I never had any idea. Cash, okay, misappropriation. And so auditors are always interested in the cash position first. Always, always. Even at the senior level in management. Most of the major theft that takes place in companies are not down the line with middle management and other employees. It's usually at the top. The big money, see people down the line take like $10 for gas, a couple $100 or something, a few thousand even by messing around with checks and so on. But the real money, the millions, they are not stolen in the middle at the bottom. They are stolen by senior management at the top of the firm. Okay? Auditors know this. So they're looking for persons all through the organization to see who could potentially be misappropriating cash or goods. Because people like to steal stuff as well, not only cash. Am I right? All right. So when you hear the expression fraud through defalcation, then you should be looking at a whole list of things that I've given you, a whole bunch of examples, 8, 9, 10, 12, 13. Did you guys see all those examples of defalcation? Did you see it? I gave you 23, but that's not all of them. There's more. Imagine that. Could people really be up to all this stuff, folks? Anyone? Could people really be up to all this stuff? 23 different things for starters?
Yes, they are.
Yes, they are.
Mhm.
Okay. If you look at down in page 8, at least on my list, maybe 2 for you guys, depending what your copy is. But if you look at frauds through defalcation,
I don't know. Internet.
sorry,
Sorry, I'm having some trouble with the internet.
no, not a problem. Keep fighting with it. It's a long list. Not recording the same money that you receive in the cash book. You collect money for the company and you don't record it. Put the money in your pocket. That's defalcation. Destroying the copy on the receipt. Anybody ever saw like the receipt with the copy on it? Yes?
Yes.
Yeah. So what some people do when they get the money, they destroy the copy. So hoping that nobody would trace it back to them and keep the money.
Mhm.
If they get $300, they record $200 and keep the rest. All this is defalcation. Okay? My. If they're selling scrap, they sell scrap and don't record it. They say I didn't have any sales today, but the $500 they made, they keep it. There's nobody keeping record of scrap. Defalcation. Okay? You get cash donations in a nonprofit or charitable organization, and you don't record it. You keep the money. So as far as most people are concerned, it never happened. You know, somebody comes and said, this $700 for the church now. Don't take it, it's for the church. And they give it to the person. Don't worry, miss. In Jesus' name, we're gonna put this money in the church account. And as soon as she turns it back, they just don't record the money coming in. And so nobody's the wiser. Defalcation. Wow. And the list goes on and on. And of course, you need to be able to give 2 or 3 examples of all these different kinds of things. That's a hint. Okay? So if I say to you, what is defalcation, or define defalcation, give 3 examples, you should just roll through that with your eyes closed. Remember, your answer does not have to be verbatim. Anybody knows what verbatim means?
Word for word.
Yeah, word for word. If you have a photographic memory and you can do it word for word, no problem. But if you don't, no problem. Just make sure that whatever words you use pretty much covers the correct answer. Okay? All right. Look at the example number 8. Everybody see that? The method of teaming and lading, or the lapping process. What do we say? What is that? Can somebody read that for us quickly? What is teaming and lading or lapping?
By adopting the method of teaming and lading or lapping process. Under this method, cash received from one debtor is misappropriated and deficiency in that debtor's account is made good when another payment is received from second debtor by crediting the second debtor's account less by that amount. This process is carried out around the year.
Yeah, so everybody gets that? So you get money and to pay on the client account to pay it down. Some people they keep it, and then when money come in for another debtor, they use that to pay the first one, and they keep doing this throughout the year. And if the auditors don't pick it up, then nobody will be the wiser. That's why people have to be checked. Sorry?
That's like insurance, with insurance then.
Yes. Give us the example. Absolutely. Tell us what you mean.
Like, when you pay in clients' accounts, if like, let's say, for example, a client gives you funds to pay on their account, their
Right.
account might not be in arrears, but so what sometimes some people is use the money to pay an account that is in arrears, and then when they get the money, they put the money back.
Absolutely. When they get it, they put it back. All
Right.
right. That's kind of, or go ahead and pay whatever needs to be paid. Either way, that is teaming and lading. Very good. And a lot of insurance people have done this. Some have gotten away with it. Some have gotten caught, which is why many insurance companies who help people collecting money still directly, they have to turn in their cash and have it counted every single day without fail. If the world comes to an end, you have to rush to the office and have it counted, and then let the world come to an end. Don't come tomorrow and say the world came to an end yesterday. They don't want to hear it for obvious reasons, okay? And that's one of them. And so the list goes on and on, all right? Undercasting receipts, in other words, you collect money and you record an amount that's less than what you collected. You record a fictitious payment, a payment that never happened. Man, this whole defalcation thing is just what it says, defalcating. It's messy, it's crooked, it's terrible. It's an attack on cash every single time. Okay? Wow. recording inflated purchases. So you say you spent $5,000 for the company's products, when in fact you only spent 3,000. What do you think the person does with the rest, class?
Pocket it, eh?
Of course. And if nobody's checking, who will be the wiser? Yeah, I like that. Pocket it. Ah. Look at the last one, number 23, by misappropriating the undispersed wages. In other words, somebody's left the company and they're still being paid because nobody took it out of the payroll. Somebody has died and they continue to pay, nobody took it out of the payroll, and the paymaster puts the money in his or her own special account and use it for their own purposes until some very sharp auditor comes around and picks it up. Mrs. Jones, can I see the employee payroll schedules? And she said, why? I don't make mistakes. I've done everything perfectly. He says, I know, Mrs. Jones. It really has nothing to do with you at all. It's just part of my audit. Now, can I have the files, please? She said, can I give it to you tomorrow? I'm kind of busy today. She says, no, I want it now. Because what could Miss Jones do between now and tomorrow, anyone?
We can make changes.
Of course. Which is why anybody who works in a bank, for example, may have been subject to an external audit, let's say from head office. When they come into the branch unexpectedly, they don't tell you when they're coming. They lock everything up, so you don't have a chance to do what? Fix anything. Okay, everybody step away from the cash box tellers. Step away from the vault. Step away from everything. And they put seals on them. When I was a young Scotia banker back in the day, the guys used to come down from Canada and what we call surprise inspections. They didn't tell you. They just walk into the bank. Everybody moves away from everything they're doing, period. And if you try to touch anything, they will deal with you accordingly. They shut it down and begin their audit. So you don't have a chance to fix anything. If you're misappropriating anything, dog eat your lunch. And nobody ever really knows when they're coming. And that's the whole idea. It's called a surprise audit. Anybody ever heard about that?
Yeah.
Yeah, surprise audit. Okay. So in the very first two sessions of your sessions, you guys have been exposed to a whole lot of stuff that a whole lot of people have not been exposed to in an entire lifetime of work. Okay, believe it or not. And that's the beauty of paying a couple of bucks and coming into classrooms and being tortured, quote unquote. Like some of my students, Mr. Wilkinson, I feel like I'm being tortured. I'm like, great. No pain, no gain. That's the whole idea. So, what about fraud? That was all about defalcation, a whole bunch of stuff. Then it's a whole bunch of stuff again under fraud. Invoices and checks and contracts are missing. That's fraud. As far as the audit is concerned, missing, gone, where are they gone? Why aren't they filed away appropriately? I don't want to hear missing. Even if they are missing, I'm going to still suspect that somebody is up to no good, because vouchers and invoices and checks and contracts are not supposed to be missing in an environment that is properly controlled. When accounts are balanced and they don't agree. So let's say you have 500 customers individually, and you have a control account for accounts receivable. When you add up, when the auditor adds up accounts receivables, they find that the amount is $1,200,000. When they add up the individual client accounts, it should equal what? Anyone?
It's the same.
Sorry?
Same thing.
The exact same thing. So in number 2, when the control account does not agree with the subsidiary accounts, that auditor is going to immediately be thinking, suspecting fraud. Because remember, under defalcation, those people take the money and they don't process any transaction to the client account. Or they debit the client account without any actual cash coming in. Or they debit the client account and don't put the money in the bank. All kinds of crazy stuff. Or they don't debit the client account at all. So the client account balance doesn't change. And they keep the money. And sometimes companies don't pick it up until either the auditors come in or the customer comes in and says, "What's my balance?" And then you're not there that day. And so they said, 1,700 mess. She said, "No flinking way. I was here last month. I paid $500 on that. Here's my receipt." And then suddenly somebody's discovered. The fraud is discovered. Okay? When there's a difference in the trial balance and you cannot find the difference for some reason, fraud is often suspected. Because outside of an outright error, oftentimes auditors believe that because of the fraud, the trial balance is now out of balance. Anybody ever heard the term trial balance?
Yeah.
Yeah, what did you hear about a trial balance? What did you hear about a trial balance?
It's the listing of all of the accounts, the GL accounts.
Yeah.
And mhm.
Yeah, the listing of all the GL accounts with all the debits on the left and all the credits on the right. And when you add them up, they should what? All the debits,
Balance.
all the credits, yeah.
Yeah.
So if an auditor picks up a trial balance and there's no balance, they want to know why doesn't it balance? The debits are 3 million and the credits are 1 million. Now all hell breaks loose. Somebody has to find out why there's a difference of $2 million or else. See my point? These are all fraudulent related issues, and auditors come in an effort to try and see if they exist, and if they do exist, who the culprits are. Okay? So yeah, welcome to fraud. I've only listed 8 or 9 of them, but don't presume that that is an exhaustive list. It's enough for you guys to ponder. But people come up with new frauds every day. Okay? Following are the procedures to detect errors. Remember we talked about errors, unintentional. Auditors have certain procedures. They check opening balances, the closing balances, they check postings, they check the control account to the subsidiary account, they verify that all the calculations are correct. They add up stuff over again to make sure that they were added correctly. All kinds of different things the auditor has to engage in to satisfy himself, herself, that the company's books are accurate to the greatest possible extent and that there are no frauds and errors in the accounting records. Will they find all of them? Hell no. Doesn't work that way. Nobody is Superman. But the idea is to try and discover as many as might be there by carrying out all of these different steps. Okay? Checking differences with round numbers. For example, thousands versus hundreds. Did somebody add a 0 or subtract a 0? Was it an error, intentional or not? Okay. All kinds of little bits and pieces. Careful scrutiny. Can't be walking into the audit and half stepping. The auditor has to be alert because persons who are involved in frauds, they are very sharp, very keen, very calculating. And if you don't understand the process and be diligent as an auditor, you will not discover as many of them as you should. Okay? And so the steps are there for the auditor to take. I've listed them in more ways than one. so that you can see some of the various steps that the auditor might take in order to determine if fraud exists or not. Okay, look at number 3, check the salary and wages register. And ask the simple question, are all these people still working here? If the answer to that is yes, are they all alive? Well, excuse me, if they're still working here, shouldn't they be alive? They should. The point is, you start asking these things. Okay? If you have assets in the company like land and buildings and equipment and all this kind of stuff, the auditor will go out and verify those things. It's all part of the audit to make sure that people, some companies, for example, they record millions of dollars in assets that don't exist. When the auditor comes and says, where are these? They say, well, it's in another state. He says, great, really? Where? Well, it's in the state. We can't see it from here. He says, great. The auditor is very keen on it, and the assets value a significant amount of money. He said, let's get on a plane. I want to see them. I want to see the serial numbers on them. I want to verify the serial numbers against the invoices that you used to purchase them. Mr. Senior Management people. And in some cases, they discovered that the assets do not exist. So the balance sheet has assets, 5 million. Auditor asks to see it, can't find them because they do not exist. Now there's a problem. The auditor has to decide whether they're going to report it to the board and the shareholders or not. Should they report, Franz?
Yes, it should be reported.
Should be. Suppose they offer you like $2 million, will you still report it?
Yes, it still should be reported.
5 million,
Yes, you should record it,
10 bloody million.
because it speaks to what the integrity.
Way to go, Indira. She has the proper justification too. Integrity, of course, and she's right. Okay, Indira, let's go back to you. 10 million.
No, you have to report it. Not only that, it could cost your license to be taken.
30 million. It gets tricky as the millions go up, yes? Absolutely, but it does not mean that what you're saying is not correct.
Right.
All those things can happen to you. All those things may happen to you as an auditor. And therefore, auditors are required to resist. Yield not to temptation. Go in, do the job, leave. Your reputation and your good name and your freedom are supposed to be more important than any amount of millions. Unfortunately, that concept does not apply to everyone. But that is what is required, as she said. And so we mentioned some of the advantages and limitations of the audit. I hope you guys read through that stuff. The advantages are from the businessman's point of view and the investor's point of view, and then other points of view. Anybody see that? Anybody see that? A, B, and C? Does anybody see the advantages and inherent limitations of the audit?
Yeah, I see it.
Yeah.
Yes. Be careful, because examiners like to ask questions about, give 2 examples of the advantages of the audit from a businessman's point of view, an investor's point of view, and some other point of view. So from the business point of view, the businessman's point of view, what are some of the advantages, anyone? If you're a businessman, what's the advantage of the audit to you?
Loans from the banks.
Sorry?
Loans from banks.
Yeah, loans from the banks, you can be sure that things are being checked out properly, and that if you need to borrow money, if you get a clean audit, the bank will lend you money. If you don't get a clean audit, nobody's going to give you that money, especially the bank. What other advantage? Number one.
Reputation.
Sorry?
Just reputation?
Reputation, yeah, absolutely. If you get clean audits, you have a reputation for doing good business, keeping good records, handling your money well. Any more?
Detection of errors and fraud.
Absolutely. Number one, the detection of errors and frauds. Big time advantage for business people. Any others?
Builds reputation.
Yeah, we said reputation.
The proper valuation of the assets.
Yeah, and the reason why we say proper is because sometimes management overvalues assets or undervalues them because they don't know how to value them. Or they undervalue them because they know exactly how to value them and they're doing it on purpose. Does everybody understand that? In other words, if a company wants to make its balance sheet look good and the assets are actually 1 million, they'll say they're worth 4 million. Does everybody understand? No?
Yeah.
Yeah.
Yeah,
Yeah.
makes it look better than it actually is. More
Yeah.
valuable.
It's called cooking the books and lying.
Yeah.
That's what it's called.
It's also a no-no.
No,
Yeah,
it's
that's
also a no-no.
yeah, that's them people on things for sale.
Oh, yeah, okay, okay, I like that. You can pinpoint who the heck they are. It is a no-no. And when auditors come in and find it, it's a yes to report them. And say to management, these assets are overvalued or undervalued. They should actually be. And then try and ascertain from management, was this incompetence or on purpose? Fraudulent.
On purpose. That's right. Yes.
Oftentimes it's on purpose. Okay. Any other advantages of the audit to the businessman?
Did they say someone say suggestion for improvement?
Yeah, the auditor can say, hey, your general ledger's a mess. You need to clean it up, and here's how you can do it. Your internal controls are horrible. How the heck could one person be signing a check and no second or third signature? Sooner or later, that one person gonna run off with the money, and so on. So yeah, valuable suggestions can come from your auditor on how to improve your business processes and protect your assets. Quite as simple as that. Well, not always quite so simple. All right, well, let's look at the advantages from the investor's point of view. Who's an investor again?
Yeah, shareholders.
Shareholders.
Yeah, shareholders, people who put their money in the company.
Yeah. Gain to get something back from the
Yeah,
company.
their aim is to get dividends back
Mhm.
and to see the prices of the shares go up. That's their primary objective. And so the auditors comes in order to offer the investor certain assurances. What are they?
You get a proper evaluation of your investments.
Yeah, proper evaluation. Proper valuation. What else?
Yeah.
Good security.
Yeah, good security. In other words, the auditor's checking stuff up to make sure that there's no hanky panky by senior management or anybody else. Anything else?
Protection of their interests.
Yeah, protection of their interests. Believe it or not, even though the board is selected to run the company, sometimes the board's interest is not the shareholders' interest. Sometimes senior management and the board's interest is not the shareholders' interest. They're looking after their own interests. And so the auditor has to come in and report to the shareholders so the shareholders can see the truth. Because sometimes boards and senior management lie. In fact, they lie all too often to shareholders and anybody else they need to lie to, like politicians. Are politicians really liars? Anyone?
That's the job.
Inherently so. They are some of the most notorious liars in the history of mankind. My. Any other advantages for the investor? The auditor makes sure that accounts are settled, meaning that whatever debts are owed are paid.
A moral check.
Yeah.
Yeah, moral check. to make sure that the people working in the firm, especially the board and senior management, are doing things that are of good governance.
Morally correct.
Yeah, morally correct. Good governance, proper disclosure, no lying, no manipulating of accounts and money and situations, no failing to disclose important information. These are all moral checks. So some boards are eternal liars. They're running their own program. And the company is failing, they lie and say it's not failing. The company is doing worse than it really is, they lie and say it's doing better. And the list goes on and on. Okay? And then, of course, some of the other advantages other than the investing the businessman. Okay? The audit allows everybody who needs to see the financial status of the firm, is it doing well or not, to make sure that when shares are being issued, they're issued at the correct price in the market, to make sure that any claims that are outstanding against the company are properly settled. If necessary, the audit report can be used as evidence in court to protect the company's interests, if whether the company is a plaintiff or a defense, and of course to facilitate taxation by all means, to satisfy the government of any country that the owners of the company are not, and the management are not trying to avoid paying their share of taxes. I hope you all know that most companies don't necessarily do a good job with that, because companies are all too often trying to find ways to avoid paying taxes, understating revenue, overstating expenses, not properly recording their sales, not properly preparing the financial statement so that the correct income tax is paid on the correct income, and so on. Overinflating depreciation so they could have a lower net income and therefore a lower tax to pay. All kinds of wild and crazy stuff. Okay. And so those are the many, 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 many advantages of the audit, but there are some disadvantages, some limitations. The auditor doesn't have a perfect situation. One of the biggest problems the auditor has is judgment. He has to use his judgment. Judgment is not rocket science. It is not black and white. It is that feeling that you have from experience, that you have to use common sense in your judgment to help you determine if something is going the right way, something is going the wrong way, based on the evidence that you find, based on the behavior of the staff, based on the mannerism of management, based on all these things. Auditors often have to make a judgment call. And since judgment calls are not scientific, then they are subject to error. And that is by all means a limitation. Okay? And on top of judgment, I give you some other examples of limitations. For example, the auditor will not find all the errors and frauds. It's humanly impossible. The bigger the company gets, the more difficult it is to find. They find some, but never all. They have to depend on other professionals who give opinions. For example, if they are looking at the value of property or equipment, the auditor may not be especially trained for that job. They have to get an appraisal. Whatever the appraisal comes up with, they have to depend on that information, even if they have a suspicion that the information is not entirely correct. Unless they can prove otherwise, they may still have to rely on it. The opinion of others, explanation of others, these are limitations because they are out of the auditor's control. Conflict is a limitation. When there are differences of opinion between the auditors and accountants and management, etc., that leads to conflict, and as such, that is a limitation. It puts a damper potentially on the audit, depending on what that conflict really is. Okay. Corrupt practices is a limitation. The auditor cannot give any assurance that your company will continue to be profitable in the future. They're not God. And so the financial statements, though they be stated as correctly as you can, does not mean that they're free of misstatement and errors. They might be. You just try to minimize them to the greatest possible extent. And of course, let's not forget number 9, the limitation of not being able to check every single detail. Humanly impossible. So those are all limitations. Despite all the great advantages, like everything else in life, there are those disadvantages that auditors must face. Okay? If you've been following, you should be somewhere around page 15, where we're talking and looking at the distinction between accounting and auditing. For those of you guys who never knew the difference, please make sure you take a moment to look at the differences. I like to ask questions about that, one or two. What are two differences, two similarities, two differences in accounting and auditing? And the only way you'll be able to respond is if you actually looked at them. For example, accounting is recording the day-to-day transactions. Auditing is the critical examination of those transactions. So one records, one examines. Accounting is concerned with the final accounts. Preparation, auditors are concerned with reviewing them to make sure that the information that the accounting did was correct and true. Okay. Accounting deals with the bookkeeping transactions. Again, the preparation of financial statements. The auditor work begins when the financial statements end. They don't prepare anything. They just come and review what was prepared. Okay. So if you didn't know the difference between the two, I trust now you do. Accounting maintains a proper accounting records, such as the general ledger, and auditors come in to test the accuracy of those records. Okay. So the differences between the two are very, very evident. You should not have any problem explaining the differences between accounting and auditing. Okay. They're pretty substantially different. When an account said to be true and fair, well, I give you a couple of explanations. When the P&L is correct, when the balance sheet is correct, all the assets are correct, the liabilities are correct. It is said to be true and fair when the accounting department, financial controller, and head of the department is using proper accounting principles based on the training in order to ensure that the books are correct, and where people are making errors in the accounting department to correct them with their knowledge and experience. These are all the things that are necessary for statements to be true and correct. No window dressing. Anybody? What is window dressing? You said it earlier.
Yeah, enhancing the books to make it
Manipulation of
appear.
accounts.
Yeah. I'm trying to manipulate the accounts to indicate or show things that don't really exist. Okay?
Right.
Don't put any makeup on the accounts. Whatever the result is from the selling of goods and services and expenses that you paid, etc., that's what you should be showing. Do not inflate numbers, deflate numbers, move numbers around, place numbers, call assets, liabilities cap, none of that stuff. And auditors try to find these things, because sometimes, especially the senior management level, when those guys want to keep their job, get bigger bonuses, all this kind of stuff, keep the corporate jet, continue to have a huge expense account, they will do all kinds of manipulation in order to make it happen. And it's the auditor's job to come in with an open mind, clear head, and be very morally correct and professionally correct with regards to their findings. Okay? And so, again, to show the true and fair view, there's a whole list of stuff the auditor needs to look at, all the way down to 16, and that's not exhaustive. Okay? Just designed to give you some idea of the things auditors are looking for, to make sure that when they put their signature on the paper, giving their opinion, that they've done all that they're supposed to do in order to ensure that the statements are true and correct. For example, final accounts should agree with the general ledger. Depreciation should be properly calculated, not overestimated or under. The inventory that is stated on the balance sheet should be the inventory that was really there at the end of the year, not numbers that you bloody well make up, which many companies do, by the way. They make stuff up. And if nobody checks, nobody's the wiser. Okay. Intangible assets are properly accounted for. Anybody knows what an intangible asset is? It's an accounting term.
An asset that you cannot physically see or touch.
Thank you. It's an asset that you cannot physically see or touch, such as goodwill and patents and such assets. Okay, brand names that have values. You cannot touch them, but they actually have value because of their nature. Okay? For example, if you sell your business for more than the value of the assets, the difference is referred to as goodwill. You can't really touch the goodwill. You won't know goodwill exists until you're ready to sell. But if you feel that your business is worth more than the actual value of the assets, that goodwill is considered to be an intangible. It's there, but you cannot touch it. Okay? When you make something and you patent it, the patent has value. You created a rocket that can go to the moon twice as fast as any rocket. You patent it so nobody could duplicate it. That patent has a value of perhaps millions of dollars, but the asset itself called the patent, the document that makes it legally yours, you cannot touch the essence of it because it has no physical presence. That's what intangibles are. And a whole list of other stuff. They look at liabilities, make sure they're properly reported, make sure the balances are correct. They look at transactions to make sure that all the key transactions are being properly recorded in the proper accounts, that the journal entries are being correctly journalized, and so on. Because all of these things, if there are a number of errors in any of these areas, then your final accounts cannot be true and correct. They'll be false and incorrect. Okay. Number 3, true and fair. The auditor must disclose all material facts. Don't hide anything. Don't let management get you to hide anything. Whatever you discover, you must disclose. If it's detrimental to the company, so be it. If the company will lose money, so be it. If somebody's going to prison, so be it. Your job as the auditor is to do your job, disclose it. What they do with it is not your business. All right. Also, the auditor has to make sure that all the legal requirements of the firm are met, whatever they might be, believe it or not. And certainly, last but not least, that all the requirements of GAAP are met. Anybody knows what GAAP is? GAAP?
Well, the generally accepted accounting principles.
Generally accepted accounting principles. These are the principles that accountants learn over time in accounting classes. And these principles must always be applied when preparing financial statements. Those of us who might not have done accounting, this may not make any sense to you yet. Those of you who may have done some accounting, you might have an understanding that generally accepted accounting principles are just those principles that we use in order to make sure that the final accounts are correct. Okay. All right. So auditing is a mouthful. Some more examples of auditing, A through GHI. If you look at H, audited accounts are a great help in the settlement of accounts at the time of admission of death of a partner. So if it's a partnership, and it's time to share the assets, the auditor should be called in to make sure that there's no hanky-panky going on and the assets are properly shared. Okay. So these guys called auditors involved in a whole bunch of stuff. Okay. And the final point, I, government may require an auditor to come in to certify the statements, to make sure that the VAT amount is correct, to make sure that the business license turnover amount is correct. to make sure that management is not lying about these numbers so that they can pay lower VAT, no VAT, and lower business license. Or no business license fees. Big job, the work of the auditor. And at the very bottom, the common denominator for all this stuff, all, is the auditor's independence and integrity. Wow. If you notice, just at the end of that unit, module 1, I have something in brackets to take you into module 2. Module 2. Anybody sees what I have in brackets, the very last sentence? And if you see it, read it. The very last sentence on the very last page of this module.
Of module 1,
Yeah,
is an auditor must be honest. That is, he must not certify what he does not believe to be true, and must take reasonable care and skill before he believes that what he certifies is true.
absolutely. Kind of like the justice of the peace, only 10 times more important. The auditor
Okay,
must
is that on?
say it again. What
What page
page
is that on?
is that on?
Page 17, it in bold.
Yeah, 17,
Bottom.
right.
17.
bold,
You
right.
got it.
In quotations.
Yeah, you see it? The last page, 17. Last paragraph, last sentence. Bold print.
Yes, sir.
Okay, great.
I'm not being honest.
Yeah, must be honest and should not certify anything that he believes is not true. Don't let people pay you off to lie, Mr. Auditor. But then that's the same for any of you guys who may have positions of responsibility. Don't let anybody pay you off to lie. How about that? Same as the auditor's responsibility. Before he puts his signature, her signature, they must be satisfied that the evidence that they have recovered from their audit is sufficient to satisfy them that the statements are true and correct. That they've discovered all the possible errors and fraud that they think they could based on their audit procedures, and that they're taking steps to make sure that everything sitting on the balance sheet and the income statement are legit. No made up numbers, no lying, no trying to circumvent taxes and lie to shareholders. And these guys probably didn't sign up for all this crazy stuff. All right, so having said that, we can now move into module 2. And the topic for module 2 is what again? Anyone?
Audit fundamentals.
Yeah, audit fundamentals with subheadings referred to as,
Principal types, errors, and frauds.
yeah, principles, types, errors and frauds again. Man, I don't know about you guys, I'm sick of seeing errors and frauds now. But unfortunately, it is that important, it keeps coming up. Because it is the secondary function of the audit, period. And it's obviously tied into the first function or the primary function. So we might as well get right into it and see what the argument is all about under principles, types, errors, and frauds. All right. So now I have yapped for the last God knows how long. It's time for you guys to kick in. Let's see. Letitia, should I start at the top or the bottom of my list? Let's see
Just start at the top.
let's throw under the boat. Letitia, let's see who you're going to throw under the boat. Shall I start at the top?
Yeah,
You sure?
yeah, start at the top.
Because if I start at the top, you know who that is.
Hmm?
Yes. Make sure you are the
Okay.
top of my list. But just think about it this way. When you're done, you'll be able to kick back and listen to all the
Everyone else.
do their thing. All right. So let's
Mhm.
go. Beginning with auditing is a systematic.
Auditing is a systematic and scientific examination of the books of accounts and records of businesses to enable the auditor to satisfy himself that the profit and loss account and the balance sheet are properly drawn up so as to exhibit a true and a fair view of the financial state of affairs of the business and the profit or loss for the financial period.
Great.
The
Keep
term,
going.
the term auditing has been distinguished from accounting and investigation. The main point of distinction is that accountancy is concerned with the preparation of financial statements, whereas auditing is concerned with the checking of these financial statements and reporting on the financial position and results of operation of the organization.
Is that true or false? I'm sorry. Is that true or false?
That is true.
That is true. So if I raise that on the 6th of March, everybody should put T.
Mhm.
Okay, keep going.
Investigation is undertaken to determine the extent of fraud, errors, and other misstatements.
Okay.
Mhm.
So
Continue.
now you know the difference between accounting, auditing,
Mhm.
and
Investigation.
absolutely. Never to mix them up again. Okay. Imagine if something is going on and somebody says that looks like an accounting issue. You said, not really. It's actually an
Mhm.
investigation issue. They say, what do you mean? And then you know what you mean. All right, keep going.
The objectives of an audit are broadly classified into A, primary objective, and B, secondary objective. The primary objective of an audit is to determine the accuracy of the financial statements prepared by the accountant, while the secondary objective is to detect and prevent errors and frauds.
True or false?
That's true.
Absolutely. We know that now. Keep going.
Several advantages can be derived from getting the accounts audited by a qualified auditor. These include the early detection of errors and fraud, determining the reliability of accounts and various types of claims, and securing loans from banks and other financial institutions. Audits are classified into various types, including statutory audits, the audit of accounts of private firms and private individuals, and the audit of trust accounts. Audits of an organization can be continuous, periodical, or interim. In addition to being a chartered accountant, an auditor should possess certain other qualities, such as knowledge of relevant laws, intelligence, tactfulness, vigilance, honesty and integrity, courage, impartiality, broad-mindedness, patience, perseverance, confidentiality, and common sense.
My God, man, that's a lot of stuff for one person to possess in order to get the job done. But unfortunately, that is true. Okay. Let me ask you guys something before she goes on, Tisha. When we say that audits can be continuous, periodical, or interim, does anybody know what that means? Take a guess. Continuous, periodical, or interim.
Um, Continues to be one that happens consistently throughout the year.
Okay.
Audit. Interim, if I remember correctly, the period of time.
Within the year, yeah.
Yeah, what was the last one? Sorry.
And
Periodical.
Sorry, say it again.
periodical.
Periodical.
I guess that it could be called at a
No.
particular time, whether it's quarterly,
Right.
half yearly,
Yeah,
something like that.
yeah,
Yes.
yeah, for a particular period. Usually 1 year. Auditors are usually done once a year, audits, but it doesn't mean it cannot be done quarterly, semi-annually. Okay, by all means. That is what we mean by periods. Well done. Okay, so when you see these three different expressions, you know that they don't mean the same thing. They do refer to audits, but they are different types of audits. One is ongoing throughout the year, continuous, as he said. The other one is interim, every 3 or 6 months for whatever reason. Maybe some hanky-panky is going on, and the shareholders want auditors in throughout the year, not continuous, but on an interim basis, twice a year maybe. And then, of course, periodical, which is typically 1 year, even though it can be less than 1 year, but typically it's 1 year. All right, Letitia, keep going.
Keywords. Auditing. Auditing is a systematic and scientific examination of the books of accounts and records of business to enable the auditor to satisfy himself that the profit and loss account and the balance sheet are properly drawn up so as to exhibit a true and a fair view of the financial state of affairs of the business and profit or loss for the financial period.
Hmm.
Continuous audit. An audit which involves a detailed and exhaustive examination of the books of accounts at regular intervals throughout the year, along with the bookkeeping and accounting procedures. Errors. Mistakes committed innocently and unknowingly while making entries in the books of accounts or elsewhere. Frauds. Fictitious entries made in the books of accounts with certain motives, intentional in nature.
Hmm.
Interim audit, an audit which is conducted for a part of the accounting period for a specific purpose. Investigation, examination of accounts for special purposes. Qualified auditor, a chartered accountant with audit experience. Statutory audit, an audit that is mandated by law.
Now, folks,
True,
these
sorry.
stick a pin for me, Indira. These keywords, I didn't just throw them in there because I didn't have anything to do. I threw them in there again so that you could focus on them, learn what they are, because oftentimes these very same keywords tend to be more functional in your day-to-day and your interaction with auditors and many of the other concepts that we're going to discuss, especially that you're not auditors by profession. But these keywords will keep you in touch with the audit process and in touch with the work of the auditor whenever they come into your firm, which will make you far more productive and far more understanding of the entire process. So you know, without me saying it's a hint, that is very likely that I'm going to go into this keyword bank and pull out a couple of them for you to define, because I expect you would be curious enough to want to know that it's a good idea to be able to understand what these keywords mean, especially in the context in which we're discussing now. Okay? All right, keep going.
True and fair view, a phrase which means that the financial statements must not contain anything that is untrue, unfair, unlawful, immoral, and unethical. That is, the financial statements should be free, I guess,
That should
of
be
errors
off.
and frauds.
Yes,
Mhm.
keep going.
Errors, frauds, and the basic principles of audit. Meaning of errors and frauds. Error refers to unintentional misstatements in the records or books of accounts by the bookkeepers. They are unintentional mistakes caused by negligence or ignorance. There are two types of errors.
Okay, before you go on, nobody raised it, but let me raise it. Who is a bookkeeper? Anybody knows? Who is a bookkeeper?
The bookkeeper is
An
someone
account-
who, oh, sorry, go ahead.
Go ahead. The bookkeeper is. Anyone? The bookkeeper is,
The person who records the transactions.
yeah, the bookkeeper is the person who records the day-to-day transactions in the journal entry, and make sure they're properly posted to the general ledger or individual company accounts. That's the bookkeeper's job. Is that an important job?
Definitely.
Definitely. Once the bookkeeper's work is done, then what we call the trained accountant, the CPA or such person, or the person with extensive accounting experience. Remember, persons do not have to be a CPA to have extensive accounting experience. True or false?
True.
The CPA is just a professional license that accounting students attain after leaving university so that they can, if they wish to become professional auditors. But you do not have to be a CPA to be an experienced, well-trained, and knowledgeable accountant. You can go into university, get a bachelor's degree in accounting and a master's degree in accounting if you want, and come out without wanting to do the CPA and still be an A1 accountant. The problem is, if you wanted to be an auditor, then because you don't have the CPA designation, they will not allow you to be an auditor. Or in some cases, they won't allow you to sign off on financial statements because you have not done the professional examination. But that does not mean that you're not just as capable as any CPA in the world. Just a matter of licensing. It's like a doctor. After 7 or 10 years of college and residency, they still have to take an examination again to get their medical license. If you do not pass the examination, does that mean that you're a horrible doctor? Of course not. The only problem is you will probably only be able to go and lecture in universities, etc., because without a license, they will not allow you to practice. Yes, absolutely. Okay, kind of like that. All right, so again, I just want to let you know that while you're broadening your horizons with regards to the audit process, it does extend even into so many other areas of your professional life, your personal life, and a whole lot of things that you cannot imagine until you've already gobbled all of this stuff up and continue to move forward in your professional world. You'd be like, wow, I'm glad I did that nonsense. Okay. All right, Letitia, keep going.
Okay, principal errors and clerical errors. Principal errors. These errors arise generally when the principles of accountancy are not observed when recording a transaction. For instance, a capital expenditure is recorded as a revenue expenditure or vice versa. Such errors are difficult to detect in the trial balance. Errors occur because of ignorance of accounting principles. The following are the examples of principal errors. Wage paid for installation of plant and machinery are recorded as wages paid to workers.
So
Revenue,
in the wrong place. Yes, keep going.
Revenue receipt is recorded as a capital receipt. Incorrect provision for doubtful debts. Incorrect provision for discount on debtors. Rent paid to landlord debited to the land account instead of the rent account. Overvaluation or undervaluation of stock on account of ignorance. Clerical errors. These errors arise because of the negligence by the accounting staff. They are called technical errors. Clerical errors may be further divided into errors of omission, errors of commission, duplicating errors, and compensating errors.
Thank you very much, Letitia. Great job, great job. All right. So now you see You have two different types of errors, principal errors, and you have the examples that they've given you, and these clerical errors, which have four subcategories that you will see very shortly. What do you think errors of commission is? Anyone? Error of commission? Sorry, error of omission. What do you think that is?
Um, Omission is when I think when you refused or have how it is omission. You just didn't include something
Yeah,
in the figures in the
absolutely. You
total.
just didn't include it. You left it out. That's what the meaning of omit. Omit is all about. Omission, leaving something out. So the error of omission means you got the money to apply to the customer's account. You didn't do it because you forgot, or you didn't do it because you stole the money and didn't prepare the transaction. Either way, the transaction never happened in the accounting records. That's what we mean by error of omission, leaving something out. What about errors of commission? Errors of commission? Well,
Yes,
go ahead.
yeah, I would say it's what's the flip side of omission? You something was put in or included in the totals that generated the error.
Absolutely. It is the opposite of omission. Instead of leaving something out, you have committed an error by making a mistake, either intentionally or unintentionally. So you put something in, but it's wrong. Okay. What about duplicating errors? When do they occur? Duplicating. What does duplicate mean?
You put
Put it
something
in
twice
twice.
Yeah,
or
making
more.
the,
Plan
yeah,
something in, yeah. Right.
yeah, making the same mistake over, by all means. It could be twice, could be three times, just making the mistake over, or even over. What now we come to something interesting. Compensating errors. What does compensating mean?
It
Compensating errors.
offsets the other.
One error offsets the other. Okay. Can you think of an example? I like how you picked that up. Yeah, one offsets the other. In what way?
Like you could have this the same amount, but they could be recorded in the wrong category or something.
Absolutely.
So
The same amount recorded in the wrong categories. And as a result, it creates an outcome that is not desirable, either intentionally again or unintentionally. All right. Okay. So those are very important terms to remember, not only for the work of the auditor, but for you guys who are in banking and finance or in retail and otherwise. All of these things happen in the real world of work, right? And so just understanding what these things mean. If you see them being committed, you know what they are. If you hear them in conversation, you know what they are. If you read in the newspaper, you know what it is, and so on. Okay, by all means. Okay. So, for example, now, if you pick up the paper tomorrow and see the Pope committed fraud, you're like, oh man, I used to know something about what fraud meant, but I know what fraud is for real now. This guy's up in the Vatican playing games with the money. And so now you can put things in even better perspective because now you know for sure, by definition, before you only had a feeling about what fraud was like, there's something wrong. Now you know that fraud is not only something wrong, but rather it is something that is
For real.
Yeah, intentionally wrong. Okay, by all means. All right, Letitia, thank you very much. Let's see if the next person can keep up with your speed. Ryan, are you there?
Yeah, yeah.
Okay. Brian said like, yeah, but only if I only if I have to. All right. Okay. I know. No, no, 8 o'clock has been a long day. It's not easy. All right. It
Yeah.
reminds me when I was sitting up in the college of the Bahamas back in the day, either in Oaksfield or Soldier Road, depending on the course I was taking. And 8 o'clock, I was just getting ready to go to class number two, which from the 6 o'clock class, now I'm going to the 8 o'clock class, and that is not going to finish until 10 o'clock. And I'm like, oh my God, somebody shoot me. Okay. And then after that, walk home because I didn't have a
When I look, ah,
no car, nobody picked me up. When I tell my sons that now who had this glorious life at my expense, they're like, really, Dad? Is that a true story? I said, you guys have not heard half the truth of the story. All right, Brian, let it rip. Let's go. I know it sucks, but let's roll.
reasons and circumstances for errors and frauds. Ignorance on the part of an employee, ignorant on the part of employees of accounting developments, generally accepted accounting principle, appropriate account classification of the necessary reconciling subsidiary ledgers with controlling accounts, and good accounting practices in general errors.
And sorry,
Carelessness,
before you go on, in other words, even without being an accountant, because those are accounting expressions. And so whenever there is a general ignorance, the staffers who are dealing with these things do not know these principles. Okay? Uh, it means that there will be problems and errors with the classification of accounts, what are assets, what are liabilities, what's cash, what's accounts payable. There's going to be errors and reconciling the general ledger accounts because they don't really know how to reconcile them. They don't really understand the function of a general ledger versus a control account. And so wherever there is ignorance, not knowing, poor training, it will lead to errors and
yes.
fraud. Let me ask you guys something before Byron goes on. What type of outcome you think ignorance might create? Errors or frauds? If the staff member is not properly trained.
Errors.
Errors.
Errors, yeah. Why?
Um,
Um,
seeing as they're not properly trained, it could come down to negligence or ignorance at that
They
point.
just honestly they just don't know.
Yeah, no,
Yeah,
They don't know.
ignorance of not knowing.
And so whatever errors are committed, they would be what? Unintentional.
No,
Unintentional. Yeah.
Yeah, absolutely. Absolutely. Uh, it's very difficult, though not impossible, to create a fraud if you're ignorant. In order to create a fraud, you have to have some knowledge of how things work.
right.
Okay? So it's hard to commit a fraud if you're ignorant, but it's easy to commit an error if you're ignorant. Very important difference, not only for the audit class and examinations, but for your everyday work. Okay? The understanding of the impact that ignorance or lack of knowledge and training can have on your work and your organization and the work that you do. A lot of people on their jobs every day are kind of messing things up sometimes because not because they're dumb and silly, but oftentimes because they are not properly, who knows, trained.
Trained.
Has anybody in this room ever been somewhere where they give you some half-baked, half-dead training and then expected you to act like God on the job? And then if you make a mistake, they're like, can I show you what to do? When in fact they didn't really show you. And sometimes, and other times they didn't show you properly. And other times they only showed you some half-dead method and all this crazy stuff. Yet
Mhm.
everybody's holding you responsible for the result. Like you should know, Shaniqua. Okay? And you're like, man, I just got here. You didn't show me everything. And now you're lying to everybody, but I should know. And then if you tell them that, then everybody's mad at you. And all this crazy stuff. Okay? All right, keep going, Myron.
Okay. Two, carelessness on the part of those doing the accounting work, another error. A desire to conceal the effect of defalcation or shortage of one kind or another, fraud. A
Yes.
tendency of the management to permit prejudice or bias to influence the interpretation of transactions or events or their presentation in the financial statements, fraud. An ever-present desire to hold taxes on income to a minimum, fraud. The intentional effort by persons in positions of authority to, one, enhance the picture depicted by the statements, depress the picture depicted by the statements, and three, cover up errors and frauds.
Cover up, the great cover up. Anybody ever heard what cover ups? Cover ups. Anybody? This is your first time hearing about a cover up?
I've heard about it before.
Yeah, what is a cover up? Man,
A
this
cover
cover
up.
up.
Uh-huh. Yeah, it's just presenting information to detract or from what is the real state of affairs.
By all means, that is a cover up. Or if you see your son abuse somebody and then you say, he didn't do it, I was right here, it never happened. Is that a cover up?
That is a cover up.
Yeah, it
Yeah,
is.
that is a cover up. I swear he didn't do it, miss. Everybody around here said it must have been him. And then she'll say his mom, I told you, I swear to God even. Mothers will do some crazy things for their sons. Okay? For some strange reason. But all of those are examples of cover-ups. All right, keep going, Byron. Types of errors. Now
Type
we're
of
getting
errors.
into that group, yes.
Errors of commission includes posting errors, casting errors, and totaling errors. For example, sale to A has been recorded in B's account. It is a posting error or it is recorded in A's account, but the amount is wrongly recorded. Similarly, the balance of BSD $510 is carried forward as BSD $501, a casting error. Certain errors will not affect the trial balance. For example, posting in a wrong account will not affect the trial balance, but if there is a totaling error or casting error, then the trial balance will not agree.
Let me ask you guys something before Byron goes on. What does casting mean? Anybody looked it up out of curiosity? At 2 in the morning while you were reading? Nobody there reads at 2 a.m. What is a casting? What is casting?
Is that dealing with like bringing forward, brought forward balances and stuff?
What about bringing one forward?
Is it like I trying to word it? Like it hasn't happened yet, but it's looking for the right word. Um uh
Casting. Look at the 3 lines down where it says the balance of BSD 510 is carried forward as BSD 501. A casting error. What does that mean?
Yes, it's brought forward as the incorrect amount
Brought
or
forward as
carried
incorrect.
over. Mhm.
Let's see if Google agrees. Somebody look up casting in Google. Casting.
Casting is not like when you transpose a number.
Transpose, where did you get that word?
I just thought of it.
Oh, okay. It's amazing what happens when you start thinking about stuff. Yeah, it's from 510 to 501 is a transposition error. Yeah. Okay. But I'm just curious to see what Mr. Google says. See if he agrees with us or not. The transposition, that's a nice fancy word. I love that one. Anybody Google?
I'm trying to see. It means to
Yeah,
total it up a list. I don't know.
Say it again.
This Google says casting means totaling up a list.
Totaling up a list. Does it say anything else?
Um, look it up.
It's funny. Just give you one little stinky.
Yeah, that's all.
Maybe Cassie doesn't deserve anything more. Right. So casting is an old British term for totaling up. Casting is also a term that we use for the transposition of numbers. In other words, in totaling up, we total it up incorrectly. And one of the ways we do that is through transposition. All right. But the real key meaning of casting, other than the transposition that may occur, is totaling up. So if somebody says they're casting some numbers, doesn't mean that they're casting them into the sea. It means they are pulling them up. All right, going. So that's errors of commission. You
Yeah.
committed errors by recording transactions incorrectly, by transposing numbers, by casting them or adding them up incorrectly. These are errors that are committed by the employee. All right, that's the first type of error. Keep going, Byron. The next type.
Okay. Error of omission. While recording transactions, the accounting clerk may omit a transaction either fully or partially. If a transaction is fully omitted, then it will be difficult to trace as both the debit and the credits are missing. The trial balance will balance despite these errors. However, if a transaction is partially omitted, then only one aspect of the transaction is recorded. In this case, it is easier to locate such an error.
Exactly. In other words, if somebody brings in a payment to go on somebody's account and you take the money and don't record any transaction whatsoever, no debit, no credit. Because you probably know, some of you, that for every debit in accounting, there must be a credit for the
Your
same
credit.
amount. Yeah. And so if they come in with the money and you keep it and don't record it, for the most part, unless the customer comes in later and screams bloody murder and presents a receipt, that transaction will be undetectable. And that's why we call it an error of omission, because the bookkeeper has decided to omit the recording and posting of the transaction. Okay, for sure. All right. Now, this thing about compensating balances, we have a whole table relating to compensating balances versus what we call principal balances or principal meaning in accounting. So the first two key errors that you should always keep in mind is that of omission and commission. Now we have two more: errors in principle and errors in compensation. Byron, what to do first of all in reading this table is to read the particular first, then go over and read the error in principle, and then go over and read the compensating error. Let's see how they line up. Beginning with meaning.
Meaning. Okay. Then the principle. A transaction is recorded in the books in an incorrect manner. Then the compensating part, an error which is counterbalanced by another error so that it is not detected by the trial balance.
Okay, so one is an error in principle because you didn't know, maybe out of ignorance, and the other one, hey, is an error where one error offsets the other one, and therefore it does not show up. One compensates for the other, and it doesn't show up as an error. Okay, keep going. Types.
Okay, types, and then the principle A. Errors which do not affect profit is example, manufacturing wages posted to the trade expense account or wrong classification of assets or liabilities. And then B, errors which affect A, profit, example, treating rent paid as a debtor instead of expenses, when capital expenditure is treated as revenue and debited to the profit and loss account.
In other words, again, these errors in principle is just showing that the bookkeeper does not have the relevant knowledge and experience in order to post and process these transactions correctly. That's all we mean by error in principle. All right, let's see how that lines up with compensating errors or types.
Okay, compensating. It may or may not affect profit. If both the original and compensating error arise in revenue accounts, profit will not be affected. But if one arises in a revenue account and the other in an asset or liability account, the trial balance will agree, but profit will be incorrectly stated. This type of error occurs frequently in casting. Example, casting of expenditure account may be 96,000 US dollars over resulting in profit while asset is improperly stated.
In other words, these compensations improperly stated in the financial statements can produce and will produce the wrong end result, the wrong net profit positions, and oftentimes the wrong positions on balance sheets. Now, I granted this part of it is kind of accounting mumbo jumbo. Yeah, for some of you guys, like whatever the hell it is. Of course, this is not an accounting class, and you guys are not here to be professional auditors. You're here to understand how the audit works, so that when you get to your firm and you hear the language and you see auditors coming in and you see people committing frauds and all these, you can now put a name to these things and intelligently discuss them and raise issues, etc. And more importantly, even understand the whole process of internal controls, the work of the auditor, and maybe even step in and correct some things that you see from day to day, given the nature of the work you do. That's really the whole purpose of this. So, will I bog you now and whether it results in profits or losses and whether the liability turns into an asset which turns into a monster? So, no. But I do want to expose you, and I did want to expose you to some of the quirky language of this business of accounting and auditing being all rolled into one, so that, yeah, you may not understand everything, but you certainly understand that principal error and principle means that you don't really have the knowledge to do it properly. And you do understand at this point that a compensating error means one error will offset the other one and therefore not be detected. And if you remember those two things so far, I am very happy with that, because that is more than sufficient for you in your professions and your understanding of these two concepts. Okay. All right. Affecting the trial balance. All right.
Affecting the trial balance. These errors will not affect the trial balance
Mhm.
for both principal and compensating.
Yes. And
Okay.
then effect
Okay.
on profit.
Effect on profit. Error that involves income and expenditure accounts. Example, incorrect distinction between capital and revenue.
Mhm.
And then the compensating part. Compensating errors include income and affecting profit. If an error affects an asset and liability account only, profits are not affected.
Okay. So again, you see the variations, whether it's principal related or compensating, and you may have heard the expression, if you're doing something, don't overcompensate them, because you might go too far and mess things up. And compensating balances and compensating matters in accounting are kind of like that. A problem occurs on one side, it happens again on the other side. One offsets the other. Nobody's the wiser. Okay? Errors in principle are not that simple because whenever we make these errors, they are far more detectable. Then that's the other point I want you to remember. Other than the difference between principal and compensating, is that principal errors are easier to detect. And as you can see, because of all the offsetting and compensating errors are more difficult to detect. Okay. All right. So those are your 4 types of errors. Can somebody call them off without looking?
Error of omission and commission,
Yes,
principal and compensating.
absolutely. Man, you guys are on a roll. It's amazing you think like, would all of this crap really stick? Of course, all of it won't stick. It's not designed for all of it to stick, but it is designed for those important things to stick so that when it's time to deal with them and let them roll off your tongue, you can do them just like he did. And notice what he did with omission and commission. He got them out of the way in a hurry. Omission and commission. And that's the whole idea. And then principal and compensating. Question: which is easier to detect errors, in principal or compensation?
Principal.
In principal. Why is it more difficult to find errors in compensating balances or transactions?
Because with the compensating set, the errors, they tend to um, offset each other.
Yeah, the
Uh-huh.
offsetting feature. Yes, yes, yes. Whether the offset is intentional or not. Absolutely. That is what makes it more difficult to determine or to discover the errors. All right. Good stuff. Good stuff. Okay. Now we're down to types of frauds. So I think we've exhausted errors so far. So let's move into something a little different and talk a little bit about the types of frauds. We talked about this initially last week when we introduced frauds, and now we go into a little more detail about the types of frauds. Okay, so we'll give Brian a break for that great job. Let's see who's going to pick up the baton from Brian. Javon, you're up. Are you there?
Yeah, I'm there.
Yeah, I'm not asleep yet. I'm here. Doggone it. Okay, Javon, types of frauds.
All right. Types of frauds. Fraud refers to the intentional misrepresentation of information by one or more individuals in management or by third parties. It is willful misrepresentation to deliberately conceal a material fact with a view to deceive, cheat, or mislead another person or party.
Stick a pin. Javon, you're already creating issues. Look at the very first sentence. Fraud refers to the what?
Intentional misrepresentation.
Yeah, of information by one or more individuals where?
Mhm. In management or by third parties.
Imagine inflicting management. That means that the majority of frauds that occur in firms are not down the line. They're at the top of the firm. How about that? We're so busy focusing on when the teller takes $10 for gas money or to buy lunch for their child that we forget or we never knew that the real frauds, where the real money is stolen and misappropriated, occurs in management. My. Now, If any of you wish to go to work tomorrow and quote me on that, feel free, doesn't matter. I've already been there, done that. I don't know how they'll feel about it with you, even though you're right. But the important thing to know is that these frauds occur very high in organizations. And oftentimes when there's multi-million-dollar losses through theft and misappropriation and frauds, all too often it happens within management, senior management at the board level of organizations, unfortunately. All right, Siobhan, keep going.
There are three key types of frauds: manipulation of accounts, misappropriation of cash, misappropriation of goods. Manipulation of accounts. Manipulation of accounts is said to be committed when the person makes a false entry in the books of accounts, knowing it to be wrong, alters or destroys a true entry in the business records, or prevents the making of a true entry in the business records. Normally, it is done by people in top management. It is often done to overstate or understate the profits and the financial condition of the business to satisfy specific objectives.
Top management again, keep going.
Manipulation may be done in any of the following ways: non-provision of depreciation on fixed assets,
Mhm.
over-evaluation or undervaluation of assets, recording revenue expenditure as capital expenditure, showing expenses of the next year in the current year's profit and loss account, not recording current year's
Accrued.
accrued expenses.
Anybody ever heard that word, accrued? Accrue, generally, I won't say, somebody look it up for me. For us, what is the meaning of accrue? Anyone? Google it.
Accrue is when you record expected liabilities like expenses. For example, PPI, your light bill. You want to record it in the month that you had that expense. So you
Yes.
make an accrual for it. I know.
Yes. Okay, I hope you guys got that little accounting explanation, but that's what accruals are all about. Okay, they build up so that you can record expenses in the correct month. That's one version of accrual. Another version of accrual is that if you have interest that is going to be paid at the end of the year, but it's only the beginning of the year, you accrue interest every month for 12 months, and then at the end of the year, the accrued interest or the build-up of interest over the entire year is then paid out to you as the account holder. Okay, that is a great word to know. It comes up often from time to time in business and finance and banking. It applies to your personal life because if you open a CD and your interest rate is 3%, you will want to know how much interest is accruing each month on your account if you're really smart, so that you can track to make sure that the bank is calculating the correct amount of accruing interest every month. So that when the year comes around and you say, hey, I only want my interest to go Christmas shopping, that they give you the correct amount. And you understand that that is an accumulation and accruing of your interest for the entire year. So those are two different explanations for the word accrual, both of which are important to know. Okay. All right. Keep going, Javon.
A common form of manipulation of accounts is known as window dressing. Window dressing in accounting is an effort made by the management to improve the appearance of a company's financial statements before it's officially released. It is a manipulation of the financial statements to show more favorable results of the business.
Window dressing. Who do you think is responsible in the firm for window dressing?
Management.
Management again. Man, how the hell did the people responsible in the firm become the culprits in so many firms? Well, that is typically the case. Okay? So while they're beating you guys to get down the line, many of them are up there doing what? Don't be afraid to say it. Doing what?
Window dressing.
committing fraud.
Committing
Yeah,
fraud, right?
committing fraud, which includes window dressing.
Window dressing.
Absolutely, committing fraud. I like that expression, committing fraud at the highest level.
Making
so-
things appear better than they are.
Yes, or just outright planning,
Lying.
steal, and transfer money into their bank accounts in not Bank of Bahamas, Switzerland. Because if they try to get in the Bank of Bahamas, they're gonna say, "Where did the money come from?" And they say, "Man, how come Bank of the Bahamas are asking people stuff now?" Because we're not the same Bank of the Bahamas as we were 15 years ago. You cannot say where the money came from. Get out the bank. Well, not quite get out the bank, but you get the point. So yes, committing fraud. And so if one of the few things that you take away at the end of the semester, along with anything else, is that serious fraud in most organizations are often and usually committed by
Management.
management,
Senior management.
senior management.
management.
Yeah, the more senior, the more fraudulent, the more money is stolen, the more windows are dressed, the more, see, violations. Imagine that. It's like a child born into a family with parents who just stank. The same parents who have responsibility for their health and their welfare and their mental stability oftentimes ends up being their worst bloody enemy by not teaching the child the proper way to go. Same thing in a firm. The senior management in many firms who are supposed to be examples to the staff, but how to protect the assets of the firm are oftentimes the ones constantly defrauding the firm. In fact, one of those guys are planning a fraud as we speak somewhere. And crypto doesn't help. Anybody knows that term, crypto? No? You ever heard about crypto assets?
Cryptocurrency.
Yeah,
Mhm.
yeah. And now that crypto's on the scene, a lot more money is going to be defrauded, put into a crypto wallet stored somewhere, and nobody knows how to open it. How about that? Okay. Welcome to the world of audit. Now, auditors have a new enemy called cryptocurrency, blockchain, wallets, both hot and cold. And so now certain firms, they go into the audit. They didn't have that problem a couple of years ago. Now, when they go into the firm to conduct an audit, suddenly they have to discover first of all, did any money disappear? And if they discover it did, like where did it go? And they might be lucky enough to discover that it went into the cryptocurrency somewhere. And then when you get into the blockchain to try and find out what happened, you discover that Tom Jones has stored it in a wallet. And the Tom Jones has the password, which is the key. Well, just some food for thought for you young professionals, because these are issues that you will have to be dealing with going forward, if not now, later. Okay, Javon, keep going.
Misappropriation of cash. Misappropriation of cash is also called embezzlement. It means fraudulent appropriation of cash belonging to another person by one who has been entrusted to it. Misappropriation may take place in the following ways: not recording full cash sales and pocketing a part of the proceeds,
Pocketing again, yes.
teaming and lading,
Again, yes.
misappropriating money received from the sale of goods, Making fictitious entries in customers' accounts for bad debts and discounts.
What does fictitious mean, class?
Made up
Fake.
or fake?
False of
Say it
Yeah.
again.
Fake.
Go ahead. Fictitious, what does it mean?
fake.
Fake.
Fake
Yeah.
or false. Yes. So if somebody says you're a fictitious person, don't smile and say, thank you, I love the compliment. It's not a compliment. Uh, Keep. Okay, ladies, if somebody says, you look so fictitious tonight. Um, you look so fictitious tonight, Monique. I've never seen such fictitiousness in my entire life. Don't say, oh, thank you. Thank you, Siobhan. Thank you, Siobhan. He's not flattering you at all. All right, keep going.
Misappropriation of the amount received from the sale of defective goods by not recording such sale. Recording fictitious cash purchase. All right. Recording payments to fictitious creditors, not recording discounts received from creditors. Recording payments to dummy or ghost workers and pocketing the money.
Excuse me, dummy or ghost workers, who are they?
Non
They- The employees that don't exist, they left or died, and nobody took them off the payroll. They just kept paying since nobody asked. They pay themselves. The master payroll person was the sweetest person ever in the office, isn't she? Doris. Anybody knows any Dorises? Sweet, sweet Doris. Until they find out that as head of payroll, Doris is paying out all kind of dummy or ghost workers who don't exist. And all the money ends up in a crypto account these days. All right. Just alerting you young professionals. Keep going. That's why you do this stuff.
Misappropriation of goods. This refers to the fraudulent application of goods by those who handle them. It can be done by recording sales of larger quantities and misappropriating the balance, or by recording purchase of large quantities while receiving less quantity and then receiving the balance amount privately.
Thank you very much, Siobhan. We are going to stop there. You guys have been more than gracious this evening after another long day at work. So please, when we come back next time, we'll finish module 2 and jump right into module 3. So if you're still lagging behind in your reading and note taking, etc., please use this week and the weekend coming to catch up. Because when we come back next Monday, we'll finish module 2 and go straight into module 3. Remember, your exam is only 2 sessions away from today. After the next 2 weeks, you'll be writing your paper, and you do not want to be caught trying to catch up a few days before your exam. Take advantage of the opportunity to catch up now, begin reviewing now. I think you have an idea on the kinds of things you should focus on that you can be tested on. And so make sure you go ahead and do that. Remember, you're not supposed to be having any fun until the semester is over. No regattas, no doggone parties, no, none of that stuff. Don't get married, don't have any kids, nothing. Until this, well, if you have kids already, that's fine. But none of that stuff until your semester is over. All right. So good luck, you guys. I'll see you next week, and please be safe out there. Remember, COVID has not gone away. It's still hanging around somewhere. So be careful, and I'll see you guys next week.
Okay, thank you. Good night.
Good night.
All right, good night.
Right.
Night.
All right.
Good night.
Good night. Take care, Lakeisha.